We'll first look at a market outlook on technical basis, and after that we'll discuss a fundamental view on different sectors and our budget picks in detail. So first we'll start market outlook. So yeah, so this is a Nifty 50 chart. If you see, I think this is a Nifty 50 chart, and currently Nifty is in a corrective mode, and Nifty made a life high at 26,277 level in September 2024. And after that, we witnessed a correction here. From top to till now, Nifty has corrected around 12.5%. And here, if you see, the trend line is going on upward sloping trend line. The Nifty since last 2 weeks taking a strong support here and form a doji kind of candle pattern on the current occasion. So doji kind of candle pattern indicates that some kind of it is actually a halt signal for the market, or it is a reversal sign if doji candle happens at support level. So here is good support level, and two doji candles still now it appears on the chart, on a weekly chart. So we'll look at exact level. If you see the market trends here, so in 2022 also there was small correction here, and in that correction Nifty corrected till around 11.67%. In 2021 as well, we have witnessed a correction, and in that correction also we witnessed 18.37% correction in the Nifty. So till now Nifty is going exactly the which he has performed in the past, and currently it is at a major juncture of a support level. If you just a minute, I'm showing you the exact level here. If you take Fibonacci retracement level of 15,000, low of June 2022 till high here. So Nifty is at mid. Nifty has breached its 23.6% retracement, and immediate support level would be placed at 22,000 mark. Here, if you see, market is in a correction mode. Market till it has not given any reversal sign for upward momentum. But yes, market has important support zone as well. In the meantime, if you see, if I draw a parallel channel here, so if you see some kind of here, it will make a support level. It exactly at support of its previous top, which has made near and April 2024. Here, which exact level was 22,800. So immediate major support zone for the market would be placed at around 22,800. Market on a short-term basis also very much oversold at this juncture, and we may see some bounce back rally here in the market. Immediate short-term resistance zone for the market would be placed at around 23,500. On 23,500 followed by 23,800, and major resistance will be placed at around 24,800. This much I'm talking about a very short-term basis. On the longer term, if you see, so market has a major support placed at around, as we discussed, that is at around 22,000 level. So market may correct, if not if it is not sustained about 23,500, then market may correct till 22,000 to 21,800 level, which has a strong support zone and multiple touch points level at the juncture. So there is a small leg is behind, is waiting if market corrects. Otherwise, market will bounce back from here on only. In this direction, immediate support would be 22,800 and 22,000. So we advise that if you see a monthly chart of the market, so here is a strong bull run is happening, and here is small correction that is around 23.6%. So it happens, it's a healthier correction right now. So long-term investors should look for buying opportunity in this correction because market is a strong upward momentum. And if I project the market from here on, so minimum possibility I am showing you for the market. Just a minute. So I am showing you a minimum future possibility of market upward momentum. If market sustains about 24,800 level on higher basis, then it will move up towards 27,600 in coming future in 1 year to 1.5 year. So 27,600 will be the very much possible level for the market from here on if it sustains about 24,800 level. So this is a very good opportunity to accumulate the blue chip stock or value added stock here, and near correction near major support level, which is around 22,800. If market corrects near 22,000 level, so these levels you have to keep in mind that we have to buy, you have to आपको ढूंढना है बाइंग अपॉर्चुनिटी इस मार्केट में. So this is a Nifty outlook. Now I am talking about, now I'm showing you Bank Nifty chart. So here also, if you see Bank Nifty, so Bank Nifty also is moving in a downward sloping channel pattern, and exactly it is currently at its lower edge of the downward sloping channel pattern. Here, important support also there in the Bank Nifty, that is its previous top, which is at around 47,700. And Bank Nifty respected that level since last couple of weeks. So 47,800 is a strong support zone for the Bank Nifty. And if it breaches, then next level would be 46,000 level. Then 1,800 points down, major support will happen in the Bank Nifty. On a higher side, major resistance or immediate hurdle for Bank Nifty would be 50,800. And if it sustains above 50,800, then potential target for the Bank Nifty would be placed at, I'm showing you on the chart as well. So potential target would be 56,400 on a higher scale for medium to long term in 1 to 1.5 year horizon. So this is a Bank Nifty outlook. If you talk about the broader market, that is Nifty 500. So Nifty 500, if you see, I'm talking about if Nifty 500, then Nifty 500 also on from top of the level, Nifty 500 corrected till 13.8%. And at this juncture, here are multiple support level as well. So previous top, it's showing a strong support from last couple of weeks on the Nifty 500 level as well. So Nifty mid cap and Nifty small cap counters, which are fundamentally good stock, you can pick at this juncture. Now I'm talking about few sectors which is important from budget aspects. So first sector would be Nifty infrastructure. So here also you can see a Nifty infrastructure monthly chart. So here strong momentum is going on the monthly chart. Long-term uptrend is going on, and it's showing a healthier correction. It's still above its 20 months exponential moving average, which is a healthier sign for the index. So Nifty infrastructure is our primary focus on from budget perspective. The next sector would be at Nifty India manufacturing. If you see a Nifty India manufacturing sector, so here also, if you see a monthly chart of Nifty India manufacturing, so here also a healthier correction is happening, and it is still sustaining about its 20-month exponential moving average. So strong rally has happened in Nifty Nifty manufacturing index, and after that we have seen a healthier correction. So these sectors are very much important from budget point of view. The next sector would be at Nifty consumer durables. So Nifty consumer durables also, if you see a strong momentum is going on here, strong rally is happening, and this sector also sustaining about its 20-month exponential moving average. and healthier correction is happening. So Nifty consumer durables also is a good important sector. And last two, that is Nifty auto. So if you see a Nifty auto, so on downside, if you see a Nifty auto, just a minute, I'm showing you. So Nifty auto is exactly at its 23.6% retracement level, and this is a very much buying opportunity in Nifty auto as well. Specifically, two-wheelers and tractor companies. You look on Nifty auto sectors. So these companies will outperform in maybe outperform in the budget sector and budget after budget. And last but not the least, Nifty pharma indices. This is a very outperforming sector at after. And if you see a Nifty pharma index, it is not actually even corrected. It is going a sideways trend. So Nifty pharma sector as well in a strong sector. So yes, all these sectors I have talked about. It's the important sector and from budget perspective. So that's all technical outlook for the market. Now I'm handing over to Dibandu for the fundamental take and our special budget picks of this session. So thank you all, and over to you, Dibandu.
So as I was saying that in the first half of FY24, there was two major events. For that reason, the private and uh, government capex was on a slower pace, as well as post Q2, we have witnessed the low economic activities such as PMI index was showing a slower pace number, as well as we have witnessed that Q3 GDP growth was cut by the RBI. And also, we have witnessed that post Q2, many consumption sectors or stocks has posting a weaker demand growth outlook. So for this was the uh, key things which was taken place in FY24. So based on that, we believe that government in FY25 to 26 budget, government main priorities for their budget will be focused on boosting capex and boosting the consumer demand. So this will be done through boosting government capex or by cutting the tax rate. So there will by doing that, consumer demand will be high, or boosting the capex. That will give more create job opportunities and will help to increase the consumption growth. So now let's start with the budget pick. Let's start with the first budget pick, which is Ashoka Buildcon. So Ashoka Buildcon is an infrastructure company which mainly focus on EPC project and road construction project. So we have seen in last year that government has allotted 11.11 lakh crores for the capex and infrastructure projects. But due to, as I mentioned, due to major events and seasonality impact, major capex has not done yet. So in the coming time, we believe Ashoka would be a beneficiary, as uh, government will again allocate major budgets towards capex, and Ashoka is the key player in this infrastructure industries. So let's start with the key triggers why Ashoka is the best candidate from infra. So, firstly, they have established track record of four decades, and they have strong execution capabilities, as well as they have conduct projects more than in more than 20 states, as well as uh, they are not only presence in road infrastructure project, as well as they are into power projects also, construction, sewage, rails, roads, smart infra projects. So they have diverse segments of order book, and they have diverse presence in uh, the constructions. Second key trigger is that they are monetizing their assets to deleverage their balance sheet. So if we currently see Ashoka balance sheet, they have around 5,000 plus crore debts. So this debt will be pay off by monetizing their assets. So in December 31st, FY24, they have monetized 11 SPP, and with that they have raised around 2,324 crores fund. And with this, they are planning to pay off debt. And also, management has a target to pay off debt around 3,000 to 3,500 by end of FY25. So with this, Ashoka will deleverage its balance sheet, and most of the interest cost will be pay off, and this will frees up the capital in the working capital sides also. And third is that they have a good momentum in their order book. So they have a order book worth around 11,104 crore. So if we compare with their FY 24 earnings, so it is two times of their revenue run rate. But it's not just 11 crore, but post quarter second quarter, they have also won roughly around 8,615 crores new order. So roughly they have order book of around 19,719 crore. And going forward, they continue to win new projects towards the road. So this further solidified their upcoming earning session. So we recommend Ashoka Buildcon on a buy with a target price of 337 rupees, which is 24% upside from the current market price of 273 rupees. Coming to our next pick, the next pick is Hindustan Aeronautics, which is an defense sectors. So Hindustan is Aeronautics is the prime contractor of Indian government. So any aerospace or any fighter jets government has to build. They had aeronautics. So aeronaut Hindustan Aeronautics build or construct on behalf of government. So we have other players in this industry, but Hindustan Aeronautic is the prime player in defense sector, in as well as in aerospace also. So let's look at their three key rationals. So they have a strong R&D, as well as they have integrated production capabilities. So what do I mean by this? So uh, they also design the ships. They also design the aircraft carriers, as well as they manufacture them, as well as they also provide managing service for the aircraft. So right from designing to manufacture or to and end of the maintenance of this aircraft, they are presence in the entire value chain of the aircraft. So with these capabilities, they are solidified their position in the industry as compared to their peers. And second key rationale is their recent development from the defense ministry. So around 2,51,100 crores uh, projects has been approved by defense ministry, which includes six advanced light helicopters, uh, T-72 tanks and T-92 tanks also, Sukhoi 30 mid aircraft. So these were the projects where government has approved these projects, and aggregate value of this contract was around 2,51,100 crores. So for surely that Hindustan Aeronautic will be beneficial of these projects, as Hindustan Aeronautics is one of the leading company and has uh, prime contractor of the Indian government. So if we take a run rate of 6,000 uh, order book, so they will end up with a very big order size also. So currently, HAL order book is roughly around 94,000, and this is expected to go around 1 lakh 20, and post that it can go up to 1 lakh 60 to 1 lakh 70 in order size. So they have a strong order book has which solidify their positions in this market. As well as company is a debt-free company, and so companies are debt-free company as well as. So third key trigger is that they are completely debt-free. Post second half of FY 25, HL has completely paid off their debt, which was around 49 crore. As well as if we see on balance sheet, they are having around cash position around 33% of their balance sheet, which is 28,900 crores cash. So this will help to scale their operation by expanding their capabilities through capex. Company has capex outlay of 14 to 15,000 crores for the next 5 years. This will increase their capacity expansion, and with this, they will able to execute their projects in time and may deliver the top line growth consistently. So we recommend buy on Hindustan Aeronautics with a target price of 4,927 rupees. So this is an 25% upside from the current market price of 3,940 rupees. Coming to the third pick is Aircon International, which is from the railway sector. So Ircon operates, they are in the EPC business. They construct railway projects as well as highway bridges and tunnel projects also. So Ircon is the leading player in the railway, as uh, they have a scalable presence. They have domestic presence also, and they have 120 plus international projects across the countries, across the world. Second key trigger is they have sufficient order book. They have order book around 24,253 crores. As well as if we look at their bidding pipeline, they have around 12,000 crores of order book order pipeline. They have a scalable order pipeline. So this solidified their positions going ahead. And coming to the third key trigger is the government push. So in the last union budget, we have seen some of the allocations in the capex, and this will be continued in this budget also, and Aircon will benefit from this also. So we recommend buy on Aircon with a target price of 256 from the current market price of 209 rupees. So which makes an upside of 22%. Coming to our fourth pick is Just Engineering. So Just Engineering is engaged in the manufacturing of water system related products, which includes water gate or wells, which are used in water treatment facilities also. So we have seen these are used in dam also, where these gates are used to release excess water, or valves are used to control the fluid flow. So Just is the if we look at the first key triggers, the Just Engineering is the dominant player in India with 60% market share in this market, and they have scalable geographical presence in international market. So They have good presence in US, UK, and Europe. So, in terms of global, they are the fifth companies who manufacture, fifth largest company who manufacture water gates and valves. So, if we second key triggers is that they have healthy order book. The order book is around 924 crore, which is 1.8 times of their FY24 revenue, as well as they have prominent clients like Vatek Wabag or MEIL or Webcoast. So these are the leading players in their sector. So Wabag is the leading player in the water waste treatment. So uh, Just has the good client base. And third, we talk about the third key trigger is the operating leverage, which will fuel their margin expansion. So currently they have a margin of around 19 to 18% range, and management is expecting that this can go, these margins can be expanded to by 21 to 23 range, and this will be done on back of the high operating leverage. So with this, we recommend buy on Just Engineering with a target price of 759 rupees from current market price of 594 rupees, which is a 28% upside from their current market price. Coming to our fifth budget pick, which is the last budget pick, is the Skipper Limited. So, Skipper is the leading manufacturer of transmission towers, as well as in globe, as well as in domestic terms also. So, Skipper has very diversified business model. So, they have three main segments, which is engineering segment, second is the infrastructure segment, and third is their polymer business. So coming to the engineering business, uh, they help to build power transmission lines, and they have in this sector they have government leader companies, customers like Power Grid, UP Power Transmission Corporation. These are the key players of the skippers in this segment. If coming to the infrastructure, so they build that power towers or EPC contract. And their third segment is the polymer, where they produce polymer pipes for tanks and used in bore wells. So these are the three key segments where skippers earn. So major revenue comes from their engineering business, around 75%, and 18% come from the polymer business, and rest balance come from their infrastructure business. Coming to their trigger point. So first trigger is that they are the leading players in transmission and distribution manufacturing towers, as well as they have strong customers. As I said, they have leading players as a customer like Power Grids and UP Power Transmission. Coming to the second key point, key trigger, that they are scaling their business in international market. So if we look at engineering business, they have roughly order book of around 6,590 crores, whereas if we look at their bidding pipeline, that is around roughly 18,000 crores. They have a bidding pipeline, and they have a hit ratio of 25 to 30% of hit ratio of converting this into order book. As well as they are aiming to increase their international revenue shares by 25%, which is currently around 19 to 15%. So this will help to improve their top line in the next 2 to 3 years. And third key point is the global shift towards renewable energy and tailwinds in the transmission line business, as well as they are looking for a value-added product. So, as company has guided that they will be growing their top line by 25% CAGR over the next 2 to 3 years, and this will be done on the back of that we have seen that on a global basis, every company is switching, or a country is switching towards the renewable energy, which will help to scale their which will be benefiting the skippers as they are into the EPC business, power EPC business, as well as we have seen our transmission line projects in India, where we are seeing a significant growth. So, Skipper has guided that total addressable market will be around 40 to 50% uh, uh, of the investment, power transmission investment, which has declared by the government around 9.15 lakh crores, and uh, this investment will be done till FY 32, and with this skippers will be a key beneficiary as they are into a transmission business also, as well as they are exploring towards value-added products in polymer business, which will increase their margins by 100 basis points. So currently they have a stable margin of 10%, and we believe in next 3 years they will able to scale their margin by 100 basis points to 11%. So based on these key three triggers, we recommend buy on Skipper Limited with a target price of 602 rupees from the current market price of 460 rupees, which is a 31% upside from their current market price. So that's it from my side.